Hello, everyone. You caught us at the end of the conversation, which actually I think it's a great place to start, even though, but I think it's good. Like I was saying to Megan, welcome, everyone. Happy Tuesday. It's Money Talk Tuesday. And we were talking about the difference between why somebody would hire me versus why somebody would hire Megan. But at the same time, I gift a session with Megan to my one-on-one clients when they get to the point where they need it, if they need it. So there's synergy here, of course, but say what you just said, why somebody hires me versus why somebody would go directly and hire you and bypass a business coach, which I think is very valid sometimes.
Yeah. So your responsibility to your clients is to help them find and recognize the correct business model for them. You're adjusting their business model itself, whereas my responsibility is they have a functional business model. We need to make the money work, right? So is that that's what I said. I don't know if those are the same words, but that's what we were
It's
talking
not
about.
the
Like
same words, but
pricing wise, we had not necessarily different philosophies, but where I'm meeting a client where they're already at with a functional business model, you are helping them shift their business model to be functional.
okay, so let's just say that again. Someone hires a business coach like me when their business model is not necessarily serving them well, and they might need modifications to their business model to get them more organized, more profitable, happier clients, happier you, right?
Yeah.
When they hire you directly, you're looking at their existing numbers the way they are today, and you're telling them what's working, what's not working, and a different way for them to possibly not their business model, but how to look at their numbers and
Yeah,
learn
how to
about
get
their
really
business through them.
how to use their numbers to be more profitable, right? Like they have the business is running, it's functioning, and there's some insecurity around like, can I pay myself more? Do I have staff? I mean, I have money in the bank, but what am I supposed to do with it? What can I do with it? Getting them super comfortable around like, oh, now I have money. What do I do with it?
Right, right. Okay. All right. So anyway, our topic, we got off topic because we were chatting beforehand, as we always do. So today we're talking about, and it's such perfect timing, prepping for the fourth quarter of the year. There are certain things that every business owner should be doing. And I guarantee you probably 80% of them are not doing all of them. So let's start with number one, which is clean your books.
Clean your book.
What does that mean? Tell
Clean your
everybody what
book.
that means.
You know how you usually get to that week right before you're supposed to hand everything over to your tax person? It's maybe like end of March and you've got 2 weeks to go and you have a year's worth of books that haven't been entered or cleaned or scrubbed and you don't necessarily know what's what.
Oh yeah, you haven't entered transactions, you haven't reconciled your bank accounts, you have no idea what you've made, you don't know have any idea if your balance sheet and your income statement are clean. I'm going to say there's 80% of the people who come to me, that's the situation they are in, because that's the thing that creatives hate the most usually is the bookkeeping.
And what does that kick off? A 1 week of pure hell or 3 weekends in a row where you are stuck inside doing your books. Gross. Or you hand it off to your tax person and you get back an atrocious bill for $5,000 because they had to clean it up for you. Gross. Gross.
Yes.
Gross, right? So now is the time to start getting on top of it, whether that means finding somebody who's going to help you clean it up or just start chunking it off now, right? And so what you really need to look at, what clean books, I mean, I'm all for close enough is good enough. I mean, I'm not going to go searching for those missing 3 pennies. It's just not in my nature. I really don't care about those 3 pennies or that $30, whatever it may be. Close enough is good enough. What I'm looking for when close enough is good enough, I want to make sure that all of my bank and credit card transactions are in there. I want to make sure that my balance sheet accounts are balanced. This is where I find the most flaws, where your bank accounts haven't been reconciled, your credit card accounts don't get reconciled. That's a big like.
Oh, you mean they're supposed to be reconciled too?
Yeah. Yep, reconcile your credit card accounts and then take a look at your liabilities like your sales tax or your employee tax liability accounts and make sure they make sense. Sometimes I'll come across like a negative liability of like $40,000 in the sales tax account. And I'm like, you mean your state Department of Revenue owes you $42,000? I'm like, whoa, no. They don't owe me $42,000. I don't know where that came from. So just make sure your balance sheet makes sense. If your balance sheet is right, your income statement is right.
Okay, so to get their balance sheet right, you got to do your books.
Yeah.
You got to do your books, your QuickBooks or your FreshBooks or your Studio Designer if you're a designer using Studio Designer. Your accounting system, even if it's manual, has to be clean and reconciled. And this is the time to do it. We're entering the fourth quarter, and you don't want to be stuck at the end of the year not understanding that you're ready to hand your stuff over to your accountant and that it's clean, or that you need help and now you can't get it because everyone's so busy. Once you
Yeah.
get into that season, you can't even get your bookkeeper or your accountant to help you. Now you're shit out of luck because you waited too long.
You want to be your tax person's favorite person? Be able to hand them your books on January 5th.
Okay, so I know one of the ways I get prepared is I get on Megan's calendar. So I don't know if you offer that to anybody. We'll make them wait to the end and let them know that if they are really in deep doo-doo with their numbers, they can have a conversation with you. And if you have a service that can help them, you will help them.
Yes.
Okay.
Yep.
All right. Let's go to number 2, which is talk to your tax expert / accountant.
What do you mean? You're not supposed to just see them once a year? What?
That's about all I get response from. I love
No, this
my
is where like come January 1, it is too late to be saving money on your last year's taxes. Like, right? So January 2021 or January 2022, if you get to the first and you're calling your tax person, you're like, oh, I think I have a big tax bill. What can I do? Too late. Too late. So one, if you're clean with your books now, you can send them like, hey, it looks like I have a profit of $120,000 this year. I don't have the cash to cover those taxes. What can I do? In the
Or you're
meantime,
fading. You're fading as you make a point. You got to come in, not go backwards. Go ahead, say it again.
okay, so January 1st, 2022 is too late to be saving taxes on your 2021 taxes.
So after January 1st, you find out you've made money and you have not figured out how to use that money in a way that maybe it wouldn't be taxable or it wouldn't 100% be taxable. And
Right.
now you can ask your accountant after January 1st, what do you suggest I invest in that would make that partially tax free? Because it's too late.
Right. I mean, there are some things that you can do for your personal investments, but by that point, your choices are very limited, right? It's going to all be taking cash out of your business to put in personal retirement type of strategies. Whereas if you start strategizing well before the end of the year using things like the Augusta loophole, where you can rent yourself your house for 2 weeks completely tax-free and take the expense, great. Or if you have children, excuse me, I got a cold and I need to cough, so I got to mute for just a second.
Go ahead.
Okay, so
you're like, okay.
All right. Yeah. So, and if you have children that you can hire to be doing work in your business, you can pay them, take the expense as a deduction. And by paying your children, you can put that money into an account that takes care of things like their dance classes and their meals for school or their tuition or whatever it may be, completely tax-free. Okay. But there are certain rules that go along with each one of these that you want to talk with your tax person well ahead of time, because it can make a huge difference on your income statement and the amount that you are taxed on while putting money tax-free into your pocket. But it has to be done in the year that it's actually done.
Okay, this is
Okay.
important stuff. So talk to your tax expert or your accountant. If they don't proactively call you, then you need to call them.
Yes.
And get on their calendar for a end of year tax planning conversation.
Yes.
Right?
Now I want to put like a huge asterisk here, okay? Your tax person is interested in reducing your tax burden with sometimes, many times, very little regard for the cash flow effect. And this is important. This is what that means. Sometimes they'll be like, hey, and I'm from South Dakota, so I'm going to use this example because I use it all the time. Hey, you should go buy a brand new pickup truck because we can deduct all of it this year and save you $30,000 on your taxes. What this tax person is ignoring in the cash flow portion of this discussion is that you just spent $90,000 on this brand new pickup truck. You have to pay $90,000 plus interest over what, the next 3 years, the next 4 or 5 years, however long you finance that truck, but you only get $30,000 back in taxes. You're still paying $60,000 to pay to save $30,000. That's not always the wisest decision. So make sure that whatever they are telling you, that you are mapping out the cash flow effect over the life of that decision, so you know that it's a good decision. It's not just a short-sighted, short-term, panicky, oh crap, I need to reduce my tax burden now, so I'm going to push future Megan is going to pay for it because present Megan really screwed up.
Gotcha. It gets complicated. Tax law is so complicated. It's so I mean, every time I talk to my accountant, I'm like, he's like, well, there's a new law. Da, da, da. I'm like, this is why I have you, because I can't keep up with everything, right? This is why everyone has to have an accountant.
Yeah.
In your own state, so that they keep up on your state's tax rules that are changing constantly. Okay, number 3, which I was so excited when I saw this on your list, because my financial advisor, my accountant hasn't called me yet, and if he's watching, please do so. But because we do have to have our end of year tax planning session. But my financial advisor did proactively call me and say, we need to get a meeting for your end of year tax planning. And here's the other thing. I found last year, my accountant and my financial advisor did not agree on everything related to how to put my money before the end of the year. And then I was really like, well, who do I listen to?
What I love most is when clients come to me and they have a tax planner and a personal financial advisor that know each other, love each other, and work together.
Wouldn't that be a miracle?
It's so wonderful. It's so wonderful. So if you can get them in, like get their strategies and then get them in a room together, that's like ideal, because again, your tax person's thinks from the minds of reducing this year's taxes, whereas your financial advisor is for like the long term of everything with your specific goals in mind, but the cash after the fact, right? Like not necessarily your business profit, but how that money is flowing into you personally. So they each have their little piece of the puzzle, and sometimes they don't communicate.
Right.
So get your tax advice, get your personal financial advice, and make sure they're reconciling.
What would we be asking our financial advisor?
Okay, so your financial advisor, make sure, like, do you know what my goals are? Because sometimes they make an assumption. They just assume that everybody wants to retire at the age of 65 or whatever it is, and whatever, just going to maximize retirement in, 25 years from now, 20 years from now, whatever it may be. Without like, hang on a second, that's not actually might not be your goal, right? Like it might be like, I'm relying on my husband's retirement, and what my money is going to be for is for these other goals that we have over here. That's kind of the division in our house. Like, do they know that? Do they know what your goals are? And then they would also know tax specific things like maximizing your 401k or maximizing your IRAs, whatever that may be. What are the limits there? And then like protection in terms of, I always talk about a safety blanket within a business, but what do they have for options for taking your safety blanket that you have for yourself, not your business safety blanket, but your personal safety blanket, in a way that it's protected, but still might be growing interest and benefiting you over on this side. Just making sure that you're taking advantage of all of the things on the personal side to reduce your personal tax deductions in your personal tax. There's a difference between a deduction and a credit. Credits are dollar for dollar. A deduction is based on your tax rate. So what can you be doing on your personal tax side for investing, that type of thing, to reduce your personal tax obligation, not your business, but your personal.
Okay. All right. So, I'm echoing. As we enter the fourth quarter, take Megan's advice here. I can't tell you enough how this is part of adulting. And even though we don't like to do it sometimes, and we kick and scream, like when we only want to adult on the things we want to do, right? Everything else is like, I don't want to do any adulting. Part of running a business as an entrepreneur is not burying your head in the sand about your numbers and actually learning about your numbers to a point where you're actually running a better business. So clean your books, talk to your tax accountant, and get ready for the end of the year. Find out what you can do to reduce your tax rate, or I don't know, like if you haven't made any money this year, you also need to talk to your accountant also, right? Because they need to understand what that's going to happen for you, how it's going to flow into your personal tax return. And then talk to your financial advisor and see if there's anything they can advise you on that will help your future investments, which is what your future self, which is what they're all about.
The eyes on your goals, not their goals for you.
Yes, absolutely. So, okay. So as we said in the very beginning, what is the difference between hiring someone like me and hiring someone like Megan? As Megan said, hire me when your business model is broken and not bringing you the money and the joy that you want. And that's when I analyze your actual business model with you and decide whether you're charging enough, offering the right things, et cetera, right? Living a business that you really enjoy. And then they call you when they want to understand their numbers and really deep dive into how to use their money properly within their business.
Yeah, like if this discussion today gave you a little bit of a pit in your stomach, that's probably time to talk to me, right? Like if you need help with that adulting portion, because sometimes I'm going to raise my hand. Like I just need help adulting sometimes. I need somebody in the room with me, not because I'm, like incompetent or anything. I just need that second person to be like, it's okay. That next step is the right step. Yep, you did it. Check that mark, that accountability, and a partner along the way, somebody that has my back.
100%. And again, true confessions on my side. Megan is on my calendar at least once a quarter. I go, Megan, I need to talk to you. I screwed up my books. I don't know what to do with this. This category's off. I messed up because I do my own books. Yes, I do. I do my own books, everybody. Why? Because I handed it off for a while and decided, nope, I wanted to get it back so I could understand it even better. So if you really need to understand your numbers, and right now, if you got that pit in your stomach that the end of the year is coming and you are completely screwed up your books, get on Megan's calendar and see if she can help you get it straight. Because the worst thing in the world is come March and you're scrambling, and then I get the phone calls. I made no money. I have no time. I'm overwhelmed. We're telling you now what to do. So heed our advice. All right, Megan, tell them where to find you.
Over at megandahle.com, and you can make an appointment and we'll chat.
Love it. Okay. And everyone knows where to find me. My name, nancyganzakover.com, is how you can get me. And if you have any questions for us related to your money for Money Talk Tuesday, put it below, because that will be questions we answer in the future on future lives. So that helps us and it helps you. All right. Talk to everyone soon. I'll see everyone tomorrow. Megan, I'll see you next week.
Sounds great. See ya.
Bye, everyone.